China's e-commerce and tech giant Alibaba has announced plans to spin off its cloud division as a separate publicly traded company in a massive shake-up. Alibaba announced the plans in its first quarterly earnings since the company split into 6 units. Revenue rose just 2% year-on-year to hit $29.6 billion, missing expectations. On Wednesday, Tencent reported an 11% jump in quarterly revenue, marking its fastest growth in more than a year. Tencent said it benefited from a solid recovery in domestic consumption in China and stronger gaming revenue. Meanwhile, China's internet search leader Baidu saw its revenue rise 10%, stronger than expected. The company is now looking to move towards technology like regenerative AI and autonomous driving. Well, let's talk now to Ray Wang, who's principal analyst at Constellation Research. Hello there, Ray. Good to see you. So what's behind Alibaba's cloud spin-off then? Is it a good move? Does it make sense?
It does. It's part of the divestiture that Alibaba's been going through, really separating different units. They believe that the parts are actually more than the whole, and they actually think the divestiture will unlock a lot of value in the market. And that's partly true, especially for what they've been going through. And as you've seen, right, the product side of the recovery is already over, and so they're experiencing a slowdown. The services side hasn't necessarily seen that, and that's why Tencent and Baidu have done better. But for Alibaba, it's really about separating the parts, unlocking the value for the shareholders, and really helping them actually move on from their position in the past.
So they want to unlock value for shareholders, but looking at their earnings, they weren't really as good as people had expected, were they? What was that down to?
Yeah, so a lot of the challenge for them really is the fact that they're slowing in growth. You've bought almost everything you wanted to buy during the pandemic, and so at this point, people are spending money on experiences and travel and restaurants, and they're going out to eat, and that's a little bit different, and they're doing vacations, and that's more important as this part of the recovery, and we've seen this in other post-pandemic recoveries, and so that's why they're getting slower revenue growth, and they're also seeing slower revenue growth also in the cloud because a lot of businesses have been held back in terms of spending. So, but that will change over time, and especially as they start to unlock value.
Let's talk about Baidu then. Some good figures from them. Why was that?
Well, that's a great point, right? So on Baidu's side, they benefited from not only the Lunar New Year spend, but revenue also rose 10% because online marketing was up. People were starting to come out. They're taking advantage of the marketing. Streaming was another big piece for them as well. And of course, they're doing stuff in the GPT space with their Ernie bot.
And Tencent did well as well. Is that all part of big tech bouncing back in China?
Yeah, for services, definitely, which was different for Alibaba, which is really about delivering products. So the China recovery, has helped Tencent. The policy environment has also helped them. But a lot of it's gaming, right? Gaming is back. It wasn't banned. It's still driving growth. But there's also payments. And as people were purchasing items, Tencent was able to jump their revenue 11%. And of course, their games, like if you play Honor of Kings, and of course, a new title called Arena Breakout was pretty popular. And of course, we all know them for WeChat and QQ.
So what's the outlook for big tech in China, do you think? Onwards and upwards?
So I think we're going to see a little bump as we see where the rest of the world economy heads. But in general, tech is still going to do very well in China. We see, for example, in Alibaba's case, the cloud business, even though it's not moving as fast as it should be, it's generating $2.7 billion in US dollars in terms of revenue for the first quarter, which is 9% of Alibaba's revenues. And so we're seeing in general that there might be slowing growth in products, but the services piece is heading up. And of course, B2B will pick up later in the quarter.
And I want to ask you about AI, artificial intelligence. Everyone is talking about it. How are Chinese companies working AI into their plans for the future?
Well, it starts with large language models, and the companies and the big tech companies that actually have the better models, which means people are training them, feeding them, that's where you're going to see advancements. We see it in chatbots to get started. We see it in the chat GPT capabilities, but we're also going to see it in operational efficiency in how you write code and what you do with code. It's going to require less people. We'll also see it in the creative side as we look at new customer experience paradigms. And more importantly, you're going to see the change in terms of how people start asking questions, interacting with machines and devices. And that's where the split, that's where we're going to see the advantages hit to businesses.
Ray, good to talk to you. Thank you for joining us. That's Ray Wang, who's Principal Analyst at Constellation Research.
Thank you.